Hi, my name is Deon Rebello, and this is the Bullion Vault. Hi, Willem, how you doing?
Very well, and you, Deon.
Good, thank you. So it is episode 26, and it's been a little bit of a lateral week with regards to gold and silver, a bit of a pullback, but in the just, I mean, they're both kind of sitting there steady. I look at it as a way of like they're in a holding position. We're going to go into a little bit on gold because JP Morgan had mentioned some forecasts that they and projections that they've looked for the end of this year and then also into 2026 and 2027. Now, I know we've been through this before because the same bank and other banks like them have also had projections for 2025 and they were smashed straight through. And no one I know had confidently said three and a half, $3,400 an ounce.
Definitely. And I mean, you're talking about the lateral movement. It's quite interesting because there has been some movement, but not as much as it would seem. If you take your points from last week, if you watched our um, podcast, and then if you watch it this week, you'll think, well, nothing has happened. Quite a bit has actually happened. It dropped below 3,300 for a while. It went back up. And yeah, there's actually more going on behind the scenes than it might seem if you're just taking it in intervals. But it seems to have that baseline. And over the longer term, that baseline seems to be a lot more stable than, you know, the daily fluctuations would suggest.
And again, I mean, we've spoken about this before, and in a typical commodity boom, which we are in right now, um, these moments are, it's almost like I say, it's like that, it's drawing tension. So it's like when you take a spring and you start to coil it, and it just draws that extra tension. And the next thing, say Donald Trump says something, or we get more missiles shot over into Israel, or China invades Taiwan, which I think would send the gold price skyrocketing. But we just need, or the market news with the U.S. economy, which is not in great shape, comes out, their data, and it's going into recession. Suddenly, then gold will trip up to close to $4,000 an ounce.
Yeah, and I mean, if you look at what's actually been happening over the last sort of week, there was the escalation of tensions in Iran with the
Yeah.
US stepping in, bombing the nuclear enrichment facilities there. That, of course, caused a spike in the gold price to go up. People started doing some profit taking. There was a ceasefire negotiated. The gold price went down. Then, of course, some of the US data on the dollar came out. It's not doing great, and the gold price was up again. So it's just all of these factors has a massive impact on the gold price, and any one of them, depending on how serious it is, could send it either skyrocketing up or just dipping down a little bit. I mean, yeah, you spoke about was Goldman Sachs with their predictions. I mean,
JP Morgan.
JP Morgan, that's the
Yeah.
one. um I mean, how many predictions have we had from these people this year? What's the latest one? I remember
So,
reading it.
end of the fourth quarter for 2025, we're looking at gold at $3,675 an ounce. It's a little bit more. I mean, we are in any other period of time, that growth from where it is now, 3,400 to 3,700 would be unprecedented. I mean, it would be sure, gold has gone up significantly, but because of what we've gone through over the last 18 months, that's like a blip.
Of course, yeah. I mean, if you look historically, $20 might have been a big deal. Now we're talking $300, and I think a part of that is because of fiat currencies that are artificially inflated, that are artificially valued. I mean, what is a piece of paper worth? It's what somebody says it's worth. And that is, I think, if we look at the gold price, and people are sort of starting to try and reconcile, why is the dollar this expensive? Why is the rand that cheap? Why is the euro this expensive, etc., etc.? And it's we've got a lot of economic uncertainty at the moment, and I think the gold price is pretty much one of the only things that sort of is trying to level that out.
Yeah, and interesting. I mean, we've spoken about the Basel III reclassification of gold into as a tier one asset. And, just in conversation yesterday, within a lot of the hedge funds, a lot of the banking system, a lot of your uh, all those kind of things, insurance companies and so on, there's a definite serious consideration for gold to be held as part of their portfolio. As we'd mentioned before, as a tier three asset, it would have a 60% of its value if they were lucky. Now it's having an equal percentage of its value in market conditions. So it's interesting that gold's still holding. What's interesting, I mean, they're talking by second quarter of 2026, we're looking at about $4,000 an ounce. I do believe, and it's going to be interesting because we now past midway of the year, we into the first month of the second half of this year. And what's interesting is I believe at some point this year we will hit very close to 4,000, if not past it, but there'll be a retracing back to the mid 3,000s.
Well, I mean, that's usually how it goes. As soon as we hit these historically high peaks, we immediately see a drop because people are profit taking. Um, and there is this sort of correction in the price again. And I mean, from what we've seen this year, there's nothing to say that that is not a possibility.
Absolutely. And yeah, I mean, I think, if we also just look at, before we go into the main part of what we wanted to discuss today, is platinum and both palladium have done exceptionally well. Palladium's now starting to follow platinum, and it's sitting at around $1,300, over $1,300 an ounce. Platinum is looking very, very strong right now.
Definitely, platinum has had a brilliant month last month. And as we said before, it's an industrial metal and it's being used in autocatalytic converters. It's being used in a number of processes, you know, as a catalyst, etc., etc. And the uses of platinum is what drives the price ultimately. I don't think as a investment that it's all that strong as it used to be. But I think the world we're moving into, the sort of new greener world, platinum has a much larger role to play, especially in the hydrogen sector. And demand obviously dictates price. So as the demand for platinum keeps going up, and these people aren't idiots. They can see what the future demand is going to be. It's not necessarily what the demand is right now. It's where's it going? Is there going to be a benefit?
I think also, and you've highlighted the big drivers of platinum is its main industrial uses. I still believe that platinum has got a lot of legs to run, especially as you mentioned, hydrogen and the whole hydrogen technology and that coming online and that technology starting to grow. But again, I mean, it's interesting to see that they're now starting to follow gold and silver. Silver, again, we've spoken at before. It's been rock solid. It's sitting. It's very different to how it normally behaves. It's less erratic. It's more consistent. Even when certain news comes in, there's a slight drop, and then it just corrects itself, literally to where it was before.
Yeah, I think bullion is the place to be right now. On that note, I mean, let's define bullion. What exactly is bullion?
Yes.
So, bullion refers to a metal, the base metal, without any attachment of price to its form. So without it being sort of made into a figurine or into a coin or anything like that, bullion refers to just the metal. So that would be the absolute base price of it before manufacturing, before I don't know, creating a sculpture or something like that. And it's basically measured by weight and purity. It's
Yeah.
the only two factors that determines the price of it. And I mean, you get that in platinum, in palladium, gold, silver, all of it classified as bullion is the basic, very basic price of that metal.
And again, I mean, these terms have been used all the time, and whenever people speak of gold, silver, and platinum, they speak of it as bullion. So, what is the history of it? If we had to go back a little bit on the exact history of it.
Well, the interesting thing is, I mean, I think it was 2,300 years ago, Sumerians first sort of came across gold, and they started using it as coins. And I mean, throughout human history, gold and silver has been used as currency, and there was an innate value attached to the gold and silver. And I think that was at that point, I can't remember the exact figures, but it was something like 8 silver coins to the gold coin. And I stand corrected on that. But
Yes.
so that was the historically low gold to silver ratio, and it was fixed, it was set it's like having 100 cents to 1 rand.
Yes.
And the gold and silver was being used to produce coins. I mean, if you look at the UK, were producing the sovereigns, which was an actual gold coin. America was producing silver dollars, which was actual silver dollars. And but here's the difference. We're talking about bullion versus this coin now, because there's a specific value attached to this coin, like $1 or,
Yes.
one sovereign or whatever the case might be. And at a point, the value of the actual metal started to outweigh the value of the coin, the face value of the coin. So the metal contained in that silver dollar would actually be worth more than the $1.
Well, we look at the old South African rand. I mean, that big silver South African rand with the springbok on it. I mean, just on silver value, and I'm talking the earlier editions of it, that there was, I think it was just short of an ounce of silver within it. And you see the price of silver, what it is valued at today. So by no means would it actually even have any real value to what it is noted on that actual coin.
But it also went the other way, because I think it was at the start of the early 20th century, the silver standard was dropped from money. And that had the exact opposite effect. In fact, the silver in that coin was now worth less than the face value of the coin. And, you know, that of course brought in paper money. The values of the paper money started getting inflated, and that caused the actual face value of those coins to drop to the point where it was more valuable to actually melt them down and sell them as bullion than it was to have the actual coins. And we look all across the world. I mean, we've had that where your 1 cent coin had more copper in it and was worth more than 1 cent on copper alone, yet the coin was worth only 1 cent. And it's a very interesting dynamic. So yes, in the mid 60s there was an increase in the silver value, and this led to an actual decrease of the bullion contained within those coins, to the point where we're sitting today, where I think the metal they're using is the cheapest thing they can find in order to ensure that the face value of that coin is actually worth more than the metal content.
Yeah, so in other words, we're sitting with a pile of junk. So, and what's interesting, and I say that with as much sincerity as I can give, but we go through different cycles where we get inundated, sorry, on people saying they've got a Mandela 5 rand coin, or they got a whole lot of old coins, and they're worth something. And again, a lot of the time I even say to them the actual metal value is not even anything worthwhile. That it literally would pay you to just put that bag of coins aside and just leave them, literally.
Yeah, and I mean it's interesting though, because there are instances where coins are actually worth more than the bullion they contain. I think it was what was it, 19. I thought I had it here, but it seems I have. Oh, crap, man.
Well, of course, there are a number of different coins that you go throughout time. And I mean, you can, you get different coins from different times. But even, and what's interesting is, especially your circulation coins, where there was a mistake or it was incorrectly struck, and there's a limited amount of those incorrect ones, suddenly the value of those shoots through the roof.
Definitely. Look, the thing is, you know, we're back to what value does it hold?
Yeah.
And to a bullion dealer like ourselves, the value that a coin holds is the bullion that we spoke of earlier. Purity, weight.
Yeah.
It doesn't matter if this has any value to a collector, because collectors have their own thing. There are things that determine a coin's value to them, and they are willing to pay extra for that minting error, for the fact that it was minted in that year at that mint. And I mean, if we look at there's an early 1900s gold coin. So this is it was a $10 gold eagle featuring a rolled edge. And in 1907, this coin sold, it was manufactured in 1907, and this coin sold in 2011 for $2.1 million. So that's an illustration of the value that these coins can have beyond their actual bullion value. And I mean, that exists. It's like stamps. I mean, what is a little piece of paper worth? Yet there are people who are willing to pay millions of dollars for a stamp. And we're moving into the realm of numismatics and coin collectors rather than bullion there. And that is the biggest difference that we need to point out here, is the difference between numismatics and bullion.
But that's exactly why I wanted to discuss this with regards to numismatic and bullion, because there are a lot of bullion dealers or that people are manufacturing medallions and they're selling them off as high value because it's a proof, or even your proof circulation coins where the circulation coin, say a Kruger Rand, you'll get a silver Kruger Rand for roughly about 850 Rand right now, there and thereabouts. You go and get a proof silver Kruger Rand, and the only difference is that it's more shiny.
Yeah, it's a case of, if you're looking to invest in bullion, now those are important. That is an important distinction to make. Invest in bullion, then you're not going to be looking at your proof Krugerrands being sold for a 50, 60, 100% premium.
Yeah.
You're going to be looking at the coins that is the closest match to the actual bullion price that you can find. Now, yes, there are manufacturing, there are markups, there are premium, not premiums, what do you call it? Our markup on the,
Yeah.
so
Manufacturing
premium, yes.
premium.
And ultimately, if you're buying a coin as, let's say, a silver 1 ounce coin with, I don't know, AC/DC, or because it's your
Yes.
favorite band, and you're paying
You attribute a value to it.
you're paying 3,000 rands for that coin because it's important to you.
Yeah.
It doesn't mean it's going to be important to the next buyer. If you're looking to eventually sell that bullion of yours, these things are going to have no value whatsoever. Yes, you might find a collector who is specifically looking for that coin and is willing to pay that premium, but it's going to be a lot harder than going to a bullion dealer and getting the bullion price for your gold or silver.
And yeah, I think, for me, it's always been keep it simple. Make sure that you get the best bang for your buck, the best dollar or rand per gram, and that's ultimately what it comes down to. We've spoken about it before, where a tarnished coin or a bar has the same value when you liquidate or sell it that a brand new high quality, high finished coin would have. As you say, unless there's a value attributed to it that you personally believe that it has that value. I mean, I've told you of stories where I've had beautiful troy pound gold coins, which is, and they were just actually sold and literally melted, but there was historic value. It was a Mandela and a de Klerk, and they literally took it, and my client was paid the value of the gold, regardless of the shiny box and the beautiful coin, and it was a masterpiece. It had no value unless we could find a buyer that was prepared to pay a premium.
And that's always the problem. It's what are people willing to pay? And I think that's pretty much with everything. It's the case with property. It's a case with bullion. And speaking of historical value and stuff like that, what do you reckon is the biggest gold nugget ever found? Because, gold usually comes in little tiny nuggets, or in the case of some of the gold mines, in literal specks.
So yeah, and again, that's also when you find gold in gold form that it looks like gold, that's alluvial gold. So that's where you see the guys panning, in the rivers, and they're panning for alluvial gold. So you'll get gold specks, and they all collect. And now and again, you'll find probably a decent sized nugget where over time or through different reactions those specks and grams collected together, you'd probably find a good 100-gram nugget.
So the biggest nugget ever found. So this was called. It was found in Australia, and they named it Welcome Stranger. It was found by
That is so Australian, by the way.
It was found by John Deason and Richard Oates in 1869, and they found this monster which weighed 2,500 ounces.
So I was interested to know 2,500 ounces. So in kilograms, I mean, that would be um, It's about 78 kilograms.
And yeah, it was worth, well, if I did some quick calculations this morning, it's worth 147 million rand today, or $8.3 million for one golden nugget. And what made me think of it, it was eventually bought by the London Royal Mint, and it was melted down to make sovereigns.
Exactly. So this historical find, the biggest nugget ever, was chucked in the pot and melted with other gold.
Which just shows you, this thing that they might never find again, this thing that might be so unique and so special, was worth nothing more than the weight and the value of the gold in it.
It kind of also brings me to think on diamonds, and of course we no specialist in diamonds. I'm not a gemologist, but I was with when I was involved in the mining sector. One of my biggest clients was actually a De Beers company that actually manufactured diamonds, and they over a couple of days period, they would take carbon and a whole lot of elements, put it under massive pressure, massive heat, and out pop would come out an actual diamond. Now, what's interesting is De Beers and a lot of the diamond industry for many, many years, for as long as we can remember, have been selling diamonds because of the exclusivity and their clarity and their beauty and their rarity. Now, suddenly, you can control a whole ton of elements. You can get the clearest, the most crispest diamond, and now suddenly it's manufactured in this period of time. But if you have to compare them, you would not know the difference. There's, barring an educated eye, and there's certain key things that would be shown under a microscope that you could pick up, but you would be very pressed to actually find the difference. And hence, that diamonds themselves have also started to lose value because of this.
Yeah, I think the fact that still retains some of the diamond value is the fact that this was made by nature. Because let's face it, it's basically a lump of coal with its carbon atoms neatly structured and rearranged into a perfect lattice, or whatever the case might be. I can't remember exactly. And yeah, we can do that. We can do that in a lab. And I think the diamonds they produce in the lab is probably purer than the ones you find in nature. But it's the fact that it was found in nature that makes it valuable.
Yeah.
This wasn't something just created by humans. This was created by the earth. I don't really get the diamonds, but obviously there's a big value to it, and a lot of people love them. So but anyway, so let's move on, because one thing we wanted to talk about was central banks
Yes.
and the gold holdings of central banks. Now, before we start off, let's just quickly bust a myth here. So usually when you think of gold and big stockpiles of bullion, you think Fort Knox.
Well, it's even a common thing, like Fort Knox is the place. It's the place where wealth is held.
And I mean, there's nothing to sneeze at. It houses 147.3 million ounces of gold. I mean, that is
It's significant.
it is a significant portion. However, did you know that Fort Knox does not hold the largest amount of gold? That honor actually goes to the Federal Reserve Bank of New York, which holds 6.8 metric tons of gold. And that is actually 25% of the gold in the entire world at the moment. So it's interesting to think that Fort Knox is always, we see it in movies, people go and hit Fort Knox, etc., etc. But it's funny to think that Fort Knox is not the one holding the most gold.
So just to qualify that, when you say 6.8 metric tons, that's 6,000 tons.
That's 6,800 tons
Yeah, it's
times
significant.
1,000
Yeah.
kilograms.
Yeah, again, and this is where we are right now in the world, and it's interesting. I mean, that whole list of the countries that are accumulating, and it's interesting that the likes of China, which were very slow to start. I mean, you see where China was 50 years ago to where it is now, financially, economically, and how just the average Chinese person has started to become more demanding of finer goods and so on. So their country, their economy is growing to the point. You see that the buying of gold from a central bank perspective, China over the last couple of years has been unprecedented in their buying.
And it's interesting that you mentioned China, because let's go back to 2019. Okay, so in 2019, China was the seventh largest economy in the world
Yeah.
in dollar terms. Sorry, in 1999. China was the seventh largest economy in dollar terms. And then within 10 years, China had overtaken Japan for the second spot, and it closed the gap to the US economy within 30% last year. So that is, I mean, from 1997 seventh to 2025, it is now within 30% of the US. And the reason for that is China is an absolute manufacturing powerhouse. I mean, if we look at it, it ships out over 14% of all merchandise exported by value
Yeah.
in the world, and it buys less than 11%. Now, firstly, in a country with 1.4 billion people, it shows you the manufacturing capabilities of them to be able to supply not only that 1.4 billion people with what they need, but also to export 14% of the world's goods.
It's
So
phenomenal, actually.
it is absolutely mind blowing, and that, of course, now they've got a massive trade surplus,
Yes.
you know. So that, of course, has had a massive inflow of foreign currency, you know, and this has allowed China to start buying gold.
Yeah.
I mean, if we look here at just some of the things, the central bank of Beijing has massive holdings of currency and bonds, primarily the US dollar. And then the sad thing is, gold only accounts for 5.5% of their holdings, even after all of that. It is China is the sixth largest holder of gold at the moment. And but here's the thing: if you look at their mining output and you look at the gold that they're buying, then you compare that to the gold that is actually being told is in the reserve bank versus the amount of gold that we know the Chinese public is buying, it doesn't match up. And this has
Yeah.
led some analysts to believe that the Reserve Bank of China is actually holding a lot more gold than they are telling us.
Again, I mean, the problem is, as far as China, it is not a democratic government or a westernized type government. They have a communist outlook on life, and that's how they constituted their government to be. And yes, I mean they've tended to open up to tourism and so on, but there is a lot that's held back that we don't know. And again, I think if you look at the whole world where this gap was created with the whole creation of BRICS, and where China and the countries, which is Brazilian, Russia, India, and China and South Africa with the small s, we created that block because we wanted to be able to create a block that could challenge the G8, challenge the petrodollar.
And it's interesting that you name BRICS because if we look at the two top gold buying countries from 2019 to 2024, it was China and India, both BRICS members. China bought 331.3 tons of gold, and India bought 241.2 tons of gold.
Yes, and what's interesting with India is that their culture is very much involved with jewelry and gold. I mean, there's even trends within the gold sector where they talk about the monsoon season, and that's specifically highlighting the buying and the capacity of buying that India has on a periodic period.
Yeah,
Periodic
no,
period.
periodically.
Periodically.
So yeah, no, China is very famous for their deep love of gold, and in fact, in 2009, India's gold purchase then was the largest increase in national gold holdings on record. And at that stage, it cost the central bank $1,045 per troy ounce, which was at that stage the highest gold price ever. Now, in 2012, 2015, we saw a bit of a market slump, and that gold price that they paid then became the baseline.
Mm.
So obviously, they do know a thing or two about buying gold.
Yeah, and again, I mean, India tends to be quite the quiet partner within the BRICS. South Africa is known for being a fence sitter. One hand holding out to the West, be it with the US as a trading partner, the UK and Europe, and then on the other side is the BRICS partners. And India tends to also be quite understated. We know China's position, we know Russia's position, yet India as an economy, it's one of the fastest growing economies also. As you say, this accumulation of national wealth has been going on, and that creates a strong base for them to play at a bigger level globally.
And it's interesting if you look at the top 10 gold buying countries. You've got a number of smaller countries there. You've got Poland, you've got
Yeah.
Turkey, Singapore, Japan, Thailand, Hungary, Qatar, and Iraq. And there's a very good reason for that. And for that, let's jump to another BRICS partner, Russia.
Yes.
So there's a bit of a debate over the true size of Russia's governmental gold holdings. I mean, I don't know who trusts what coming out of Russia anymore, but officially, officially, let's put that in inverted brackets. Russia holds the world's fifth largest national gold hoard, and that was after they started buying 2,000 tons for its reserves over the last 20 years. Now, once again, this gold buying spree comes on the back of an oil and gas price increase, which makes up half of Russia's total exports, and it accounts for a fifth of its economic output. So that began rising in the early 2000s, and that, of course, boosted Russia's GDP and Moscow's tax revenues, which they then went. And Vladimir Putin, I think he had just sort of become president back then, or for the second time become president. I can't remember exactly. But basically, at that time, Putin called for the Central Bank of Russia to increase gold's share in their foreign exchange reserves. And then also he called for greater investment into Russia's gold mining capabilities. So that, with all of that happening, the country has moved from fifth position to number 2 among the largest producing nations of gold. And it's actually quite interesting. If we look at the top 10, we've got the United States.
At the top, yes.
There's no disputing that.
And by some margin also.
Yeah, I mean it's by more than double.
Yeah.
It's almost triple of the next biggest one, which is Germany, surprisingly, with 3,351 tons. Now, the interesting thing is America hasn't increased their gold holdings in quite a while. You know, they've got these massive reserves. At least they say they've got this massive reserves. I'm still waiting.
Well, we're waiting for Elon to come back and let us know, but now we don't know. The bromance between him and Trump seems to have completely fallen apart. But there's also talk that things are still happening behind the scenes.
Well, I don't know. As I said, we're still waiting for the fabulous reveal of Fort Knox, and the public, or the online or real time count and essaying and surveying and whatever of it. But anyway, let's take the word for it. They're sitting with 8,133 tons of gold.
Yeah.
Now that is absolutely insane. Third, we've got Italy, believe it or not, with 2,451 tons, followed by France,
Yeah.
Russia, China, Switzerland, India, Japan, and then Netherlands in number 10 with 612 tons.
So what's quite interesting there is, of course, your majority of the countries within that top 10 are your established first world countries. Their growth rates have slowed. The US, you look at Europe, even birth rates, all those kind of things, those economies are starting to splutter. The fact that China has moved so strongly through that group, and as we've spoken about their GDP and that, there's a lot more to come over the next 20 to 30 years, and we're going to see that whole shift of power. And kind of this is the beginnings of it. I mean, that formation of BRICS was that almost that creating that stick in the sand, saying this is where we're starting, and there's a definite change of the power within the world, who has and who hasn't.
And it's interesting because if you look at what's happening here, it all sort of started if you look at the countries, China, India, Poland, Turkey, Singapore, Japan, Thailand, all of those countries that are increasing their gold holdings. And you might be thinking, why are they doing that? What's the benefit? Now, it's quite interesting because if we look at Russia, what happened? As soon as the invasion of Ukraine took place, there were sanctions levied against them.
Yeah.
And basically the dollar, the US dollar, which was the main holding, the main reserves for many, many countries, was essentially weaponized against them. And that prompted a lot of countries to start diversifying. Instead of holding dollars, which can easily be regulated by banks and banking systems, they started moving to gold because there's no one country that can that can sort of
Claim
control.
gold, yeah.
They can't claim gold. They can't control the flow of gold. They can't control the sale or the value of gold the way that they can of the US dollar to a specific country. And that's why you'll see a lot of the smaller countries are diversifying into gold or buying more gold exactly to prevent that or prevent other countries from being able to do that on a whim.
And also, what's quite interesting with that whole thing is if you look at the claim of gold, right? As a currency, gold is considered to be in the top five currencies globally as a currency. And what's interesting is this whole move to Basel III, the reclassification. And this is why I keep saying I think the growth of gold, we only literally start to sit on the edge of it. Because with the that reclassification of gold to a tier one asset, that's also going to start to force a lot more buying because it's showing its stability. It's showing that it's a definite hedge in these uncertain times. It's a definite hedge against inflation. It's shown hands down its growth over the last 50 years, where every other major currency has actually lost value. And how you see that is what would 100 rand buy you? What would $100 buy you? What would £100 buy you 10, 15, 20, 30, 50 years ago to what it will buy you now? Complete loss. Same thing, what an ounce of gold would have bought you then to what an ounce of gold would buy you now. Chalk and cheese.
And I mean, that actually goes back to ancient Roman times when Roman Roman soldiers were paid with gold coins.
Yes.
And if you look at the average centurion salary and you look at an army captain, US army captain today, and you take the value of the gold they were paid then, and you take the value of the same amount of bullion, same weight and purity today, they pretty much match up. So that's the thing. It's gold has retained that buying power, that value since ancient Roman times for thousands of years.
Willem, in closing, was there anything else that you wanted to highlight?
Yes, one more interesting fact here. You know Mitsubishi.
Yes.
They make some awesome cars,
Good Japanese
some
company.
not so awesome cars as well, but I'm thinking of the Lancer and the Evo and those, fantastic. So did you know they make gold bars as well?
No.
And in fact, Mitsubishi has made the biggest gold bar in the world. In 2005, they produced a 250 kilogram gold bar.
That's insane.
And yeah, I thought it's stamped 999.9 fine gold. So I thought, what's that worth? So let's start. Firstly, it's worth $26.8 million or 474 million rands. And currently, that still holds the record as the largest pure manufactured gold bar.
It's insane.
And then if you look at gold, we were just talking about its enduring properties. And the fact is that almost all of the gold that has ever been mined
Yeah.
is still around. Gold.org estimates that nearly 200,000 metric tons have been mined throughout human history, and two-thirds of that is believed to have been mined since 1950.
Sure.
And it's incredible to think that all or most of this gold is still around in some form or another. And it just underlines the actual value of gold. It's got uses. It's got its uses in high-end electronics and the like, but mainly as an investment vehicle, it
Yeah.
is still absolutely brilliant.
And just on that, I mean, we always talk about gold and the importance of holding gold and the value of holding gold. And again, this all speaks to that. And for us, again, just always be mindful of what you purchase, where you purchase it. Make sure you do your homework. Make sure you're checking where you get what you're buying. From jewelry. I mean, I've been looking into that side of the gold and bullion. Uh, and what's interesting is a lot of your high-end jewelry that's very expensive has probably the least amount of gold with it, versus what you'd buy probably 20, 30 years ago. But again, that shows that there's value to gold. And we talk about this all the time, that we big believers in its value. We can see that from what you've spoken about today and what we've chatted about, that there's an unbelievable value to gold and how it holds and maintains wealth.
Definitely. And on that note, I think it's time for us to go. So if you enjoyed the content, be sure to leave a like. And if you want to see some more, be sure to subscribe. And we'll see you guys in the next one.
Thank you. Bye.